Stocks closed mixed on Wall Street as yields continue to surge. The S&P 500 and the Dow Jones post 2 straight days of losses. Asian markets are largely higher, while the GIFT Nifty is also suggesting a subdued start for our own markets. Crude prices extend their gains. Brent surges over 2% to $76 a barrel as concerns over potential supply disruptions in West Asia ease. Gold prices hit record highs on the back of uncertainty over the US presidential elections and the conflict in West Asia. Bajaj Finance sees stress rise in the second quarter while also raising guidance on credit costs. PTM, on the other hand, gets approval from the NPCI to onboard new UPI users 9 months after the Reserve Bank of India imposed curbs on registering new users. In key earnings to track today, Hindustan Unilever is likely to see rural demand recovery offset by an urban consumption slowdown. Also, watch out for numbers from Pidilite, SBI Life Insurance and TVS Motors. And the IMF projects India's GDP growth to moderate to 7% in FY25 and 6.5% in FY26. It expects India's growth rate to stay below 7% over the next 5 years. It pegs global growth rate above 3% and says the battle against inflation is quote-unquote almost won. Good morning. Midweek is here and you're watching Power Breakfast on CNBC TV18 in the Mumbai News Center. I am Hormuz Fatakia. Let's first take a look at how the Asian markets are faring, and it's a fairly sluggish start for the Asia-Pacific markets this morning, and most of the indices are trading either above or below the flat line. The Hang Seng is looking to be an outlier here, trading with gains of around 0.7%. The Taiwanese index is trading 0.3% lower. The Nikkei absolutely flat. The Shanghai Composite too absolutely flat. No change there whatsoever. Even the bigger news that is coming from Japan, though, is the listing of Tokyo Metro, which was one of the biggest IPOs that the country has seen since 2018, and that listed at a 45% premium to its issue price. So a big listing that has taken place in Japan, but the markets there are absolutely flat. Pull up the GIFT Nifty as well, and that will give you an idea of how our own markets are likely to start off. Well, absolutely flat here as well. The implied open suggesting a 5-point uptick so far, and considering the fall that we have seen over the last couple of trading sessions, the bulls will certainly be eyeing some respite from lower levels. But moving to Wall Street, then benchmark indices there ended absolutely flat as well. The S&P 500 and the Dow fell for the second straight day, and it's the first time since September that this happened. The tech-heavy Nasdaq, though, closed above the flat line. The Treasury yields climbed above the mark of 4.2% for the first time in 3 months before the slight pullback following cautious commentary from Fed officials. Now, key earnings also continue to trickle in from automaker General Motors, which beat estimates, while Lockheed Martin posted lower than expected quarterly sales. Now, as investors are eyeing what's next for the Federal Reserve in November, former Fed official Eric Rosengren and Richard Clarida hold the opinion that data remains resilient and the possibility of Fed cutting rates are high.
As you just pointed out, inflation has come down, and while core PCE inflation's at 2.7%, that's still higher than the 2% inflation target. As a result of oil prices being a bit soft, we have a total PCE number that's 2.2%. So that's pretty close to the 2% inflation target. And the unemployment rate is 4.1%. The committee, when it met in September, thought we would end the year at 4.4%. So the labor market already is doing better than the Fed expected at the last meeting. So I think it's well set up for a 25 basis point cut at each of the next 2 meetings.
They have the judgment. I think the minutes confirmed this. And indeed, the chair referred to the initial 50 basis points as a recalibration. I think you are correct. There's a range of views on the committee about neutral, and neutral could be higher than most people on the Fed think. But I think they all agree that wherever it is, it's below the current setting of the funds rate. So I think there will be agreement for a pretty broad range of data for another 2 cuts. But I do think as we go into next year, I do think they'll be generally data dependent, and whether or not we get the cuts that the dots indicated will really depend upon what happens in 2025.
Now to our final update then from the global markets, look at how the European markets ended. Even they ended below the flat line, but no significant moves coming in there as well. The DAX, the CAC, all ending with moderate losses, but the focus there was on the technology giant SAP, which hit a record high after it raised its revenue guidance on the strong cloud business growth. The SAP shares were up over 2% in Europe yesterday, but no significant cues emerging from the European markets as well. And that's all we have on the global market front, but how will all of these overnight cues impact our own markets? We have our research team joining in with how the trade setup looks like, the stocks that are likely to be in the news, and the setup on the FNO side as well. First up, Vivek joins in to get all the market cues you need to watch out for. Vivek, good morning. Well, nowhere to run, nowhere to hide. It was yesterday's session, but what's the handover and what's the setup looking like this morning?
Well, good morning. While the intensity of the weak handover may have abated, it's still quite a muted handover. Like you mentioned at the start of the show, U.S. markets too ended largely lower. Along with that, crude oil prices too, after yesterday's 8% downtick, yesterday rebounded for the second straight session. Brent futures now hovering around the $76 a barrel mark. But Indian markets is where, all the eyes will lie. Remember, Nifty yesterday, like you mentioned, saw intense selling pressure throughout the trading session, but what was even more disappointing and given the fact that a little more worrisome was the fact that you actually saw the broader end of the market see significant selling pressure. The small cap index and the mid cap index saw very, very weak market breadth with advances decline ratio very much skewed in favor of the declines. Now, when you're talking about the mid-cap index, remember it's down almost 5% in just the last two trading sessions. Along with that, what really happened in the session yesterday, you saw a very large listing happen, Hyundai Motors, but the listing was quite tepid, ended 7% lower from the listing price. Along with that, FI selling is something that markets will continue to keep an eye out for. It's gone ahead and cost almost $10 billion in October itself. What is it that will keep the markets active today? Earnings reaction, quite a few NBFCs, M&M Financial, Bajaj Finance, markets will react to that. The insurance pack will be in focus. ICICI Prudential and Max Financial came out with their results yesterday. Well, what are the key earnings today? HUL, Bajaj Finserv, AU Small Finance Bank. Asian markets, GIFT Nifty indicating a muted start for our markets today.
Muted start indeed. We'll see if these muted levels hold as the trading day progresses. Vivek, thanks a lot for that. Over to Vinny now. Would list out the stocks you need to watch out for. Vinny, good morning. What's on your list?
Good morning, and a whole host of earnings. So let's start with Max Financial. Strong performance in Q2. New business premium grew by 25%. VNB margins also saw an improvement, 23.6%, and APE growth at around 31%. ICICI Pru, on the other hand, managed to report an in-line to a bit of a weakish set of numbers, is what you could say. New business premium was in line with the estimates, while the AP as well as VNB margins was a bit of a miss from the CNBC TV18 poll. So keep an eye on that one. Persistent System, that is another company that reported a good set of numbers, delivered an impressive revenue growth of around 5.3% on a quarter-on-quarter basis, and the management is quite confident of delivering good growth going forward, given that there's a good deal pipeline as well as sustained margin improvement, what will be driving the growth. Zomato, decent numbers, steady quarter in Q2 FY25, strong performance from Blinkit, Hyperpure as well as going out segment, while in terms of the food segment, that continued food delivery segment continued to perform steady versus last quarter is what we've seen. And other than that, they have announced a fundraising plan of around 8,500 crores to improve their balance sheet. So keep an eye out on that. Amber Enterprises, strong performance coming in from the company as well. Good revenue growth as well as profit in line with estimates. Margins also slightly bit of an improvement there. Profits, the company's reported a profit this time versus a loss last year. So keep an eye out on that. M&M Financials, a weak number that is reported by the company in Q2. Profits is something that came in at 370 crores, while the margins, the credit cost of the company saw a bit of an impact on a concern coming in on that front. Shoppers Stop, that also reported a weak set of numbers. Company reported a net loss of around 20 crores versus revenue of 7.3 crores, and muted demand was the main concern. Chennai Petro also weak performance. GMDC, strong performance coming in from the company, good growth in terms of profits as well as revenue. On the other hand, we also have some of these announcements that have come in. Power Grid has turned out to be a successful bidder for interstate transmission systems, so keep an eye on that. Sonata Software also on the back of a multi-year AI-powered management service contract, as well as rights, they bagged a 455 crore order, so keep an eye on all these stocks today.
Vinny, thanks a lot for that update. Over to Sudarshan now for cues from the FNO space. Sudarshan, good morning. What's the setup looking like there now?
Morning, Hormaz. So amid heavy selling, we saw market closing with deep cuts, especially mid-cap index, which has fallen almost 5% in last 2 days. And it's a broad-based selling. On the earnings front also, there is no surprise on the positive side. Most of the earnings so far, especially for mid-cap companies, have been below expectations. And for today also, GIFT Nifty, not really it matters that much nowadays, but still GIFT Nifty for today is indicating a subdued start. Talking about institutional flows, FIs have sold almost 4,000 crore, while DIs have bought almost 6,000 crore, and FIs have sold now for consecutively 17 sessions, and now total sell figure has crossed $10 billion. In the month of October. Talking about the index futures, here also they have sold more than rupees 200 crore. On the long side, they have reduced contracts of almost 4,000 and added short contracts of more than 2,300. And with this, FI's long exposure now reduced to 32%. On the client side, we continue to see addition of longs. Total contracts added are 2.2 lakhs, and their exposure now is long exposure now at 64%. On the option front, two calls that were most active were 24,600 and 24,500. And on the put side, two stacks that were most active were 24,400 and 24,300. Support for Nifty is now seen around 24,400 and resistance is seen around 24,600 to 24,650. Lastly, stocks that can be in focus. 4 stocks have come out of ban, and those are Granules, IDFC First Bank, SAIL and Hindustan Copper.
Stocks coming out of the FNO ban as expiry draws closer. Sudarshan, thanks a lot for that update. Time for a short break. Up next, we get you all the details from Bajaj Finance's second quarter numbers. Stay tuned, back on the other side. Welcome back. Now, Bajaj Finance reported second quarter results after market hours yesterday. Numbers indicated a higher stress. Abhishek is joining in with more details. Abhishek, how do the numbers look like?
Homaz, good morning. To begin with, unsecured lending for the entire BFSI space is seeing rise in credit cost as well as asset quality deterioration. So Bajaj Finance also saw stress rising, and they have raised their guidance for FY25 credit cost to about 2.05% from the earlier guidance of about 1.75% to 1.85%, which means that provisions for FY25 will be higher than what they estimated earlier. Net interest income grew by 22.8% YOY and about 5.65% sequentially. Calculation shows that the net interest margin has largely remained stable on a sequential basis. The provision spiked up to about 13.3% on a sequential basis, which led to credit costs rising further to about annualized credit cost of 2.15% versus about 2% in the previous quarter. So the PAT grew by 13% YOY and about 2.6% sequentially. The company had a one-time gain from the stake sale that they have done in Bajaj Housing Finance of about 2,544 crore, which is net of issue expense in Q2 FY25. With respect to their asset quality, in absolute value, gross NPA has increased by 29.5% on a sequential basis, and as a ratio, gross NPA ratio is now at 1.06% versus 0.86%. With reference to the PNL versus RPOL, the NI is slightly ahead of RPOL, while on account of elevated provisions, PAT has come in slightly below RPOL. Back to you.
Abhishek, thanks a lot for that. We'll watch out for a reaction in Bajaj Finance. That'll be an important stock to track this morning. But moving on, the other important stock to track this morning, though, is going to be PTM. And that's because the parent company, 197 Communications, said last night that it has received an approval from the National Payments Corporation of India to resume onboarding new users on its UPI platform. Ritu is joining in with more details. Ritu, good morning. How important is this development for PTM?
Good morning, Hormaz. It is a very significant development because keep in mind, since the RBI ban in January this year on PTM Payment Bank, the platform is not allowed to onboard any new UPI users. But now, after reviewing their application, which is submitted in August, the NPCI has granted 197 Communications, which is the parent entity of PTM, approval to onboard new UPI users. This is, of course, subject to 197 adhering to various norms issued by the NPCI and other regulatory guidelines. Now, keep in mind, PTM had recently disclosed that it has completed the migration of about 13.5 crore UPI customers onto 197 Communications as its third-party payment applicator platform, and that is, of course, to be done in partnership with SBI, HDFC, Axis Bank, and Yes Bank. Its monthly transacting user base has come down to about 7 crores as of the second quarter because of the migration of these customers, and of course because it was not allowed to onboard any new ones. Now, in terms of the significance of Paytm getting this permission to increase its UPI base after 9 months, yesterday, in the earnings call, we had Bajaj Sharma, the founder of Paytm, talking about how UPI is going to be a big opportunity for the company as its pivot to a distribution platform. The focus really is on distribution of financial services and products, and therefore, in partnership with other lenders, it will be able to cross-sell, some of these services and products to the new customers that it is onboarding through the UPI base. So a positive development, a big one for Paytm.
Ritu, thanks a lot for that. We'll keep an eye out on Paytm this morning. But time for a short break. Up next, we get you cues from the commodity space. Stay tuned, back on the other side. Welcome back, and Manisha Gupta now joins in with all the updates from the commodity space. Manisha, good morning. Oil appears to be back on the boil again.
Oh, yes, it is, almost every single day another all-time high. And today as well, gold is trading at an all-time high in the Indian markets and the global markets as well. We've done $27.50 an ounce in the global markets, and Indian prices have hit almost 79,000 here. Well, the conflict in West Asia and the U.S. election jitters have led to a lot of safe haven buying in case of gold, whether it's about futures, ETFs, physical buying that really seems to be getting supportive. But the major up move overnight really came in for silver. With 3% gains, we've seen the global silver prices hit a 12-year highs at $35 an ounce. But in the Indian markets now, in all futures and in the spot markets, we are trading above 1 lakh rupees a kg. So silver clearly outperforming. In last 12 months, we've seen silver prices gain up by 50%. So very, very strong up moves coming in for gold and silver. But we also are looking at a better move coming in for crude oil prices. 2% overnight, because this is due to the recent China stimulus measures. Also, tightening global demand and supply balance seem to be supporting crude. Remember, last week was a 7% decline in crude, but this week until now we are up by nearly 4% for the crude oil prices. So everywhere that you look in sense of commodities, we really seem to be doing quite well.
Doing quite well. Gold is continuing to shine bright. Oil prices on the rise as well. Manisha, thanks a lot for that update. On to some international updates now. Prime Minister Narendra Modi will hold a bilateral meet with Chinese President Xi Jinping on the sidelines of the BRICS summit in Russia. Foreign Secretary Vikram Misri announced the meeting during a press briefing, emphasizing its importance in the wake of recent agreements between India and China, considering the eastern Ladakh border row. Now, the announcement follows a statement from the Chinese Foreign Ministry, which confirmed that both nations have been in close communication through diplomatic and military channels to resolve border issues. Now, moving on to updates on the hoax bomb threats. Bomb threats targeting Indian airlines continue to cause widespread disruptions in the Indian aviation sector, with more flights receiving security alerts on Tuesday. Indigo, Akasa and Vistara flights were the latest airlines to face such security scares. Now, nearly 50 flights received bomb threats on social media on Tuesday, and all of them were found to be hoaxes. A bomb threat was reported on a Vistara flight from New Delhi to Kathmandu, prompting the Nepal Army bomb disposal team to inspect the airport. The Nepal Army later confirmed that no traces of explosives were found during the search. Now, the IMF has projected India's GDP growth to moderate to 7% in FY25 and 6.5% in FY26. Now, in its report, the IMF expects India's growth rate to stay below the 7% mark over the next 5 years. And the IMF also expects global GDP growth to stay above 3%, adding that the worldwide battle against inflation has been, quote-unquote, almost won. Ritu is here with more details.
The IMF's latest World Economic Outlook report pegs India's real GDP growth at 7% for this fiscal year, slightly below RBI's 7.2% estimate. Growth is then expected to dip to 6.5% by FY26 as the post-pandemic demand normalizes and stabilize at 6.5% by FY30. So no change here from the previous forecast in July. On the inflation front, the IMF expects inflation to hover slightly above RBI's 4% target, averaging 4.4% for this year and 4.1% for the next fiscal. Globally, the good news is that the inflation battle is largely won. After peaking at 9.4% in the third quarter of 2022, IMF expects the headline inflation will fall to 3.5% by the end of next year. Now, the IMF calls this decline in inflation without a global recession a major achievement. Global growth is expected to hold steady at 3.2% both this year and the next, though the medium-term global growth outlook remains mediocre compared with the pre-pandemic average at 3.1% by 2029. Now, despite the good news on inflation, there are downside risks which are increasing and dominate the outlook, especially from regional conflicts, tight monetary policy and trade tensions. Now, with the return of inflation to near central bank targets, the IMF is also battling for a policy triple pivot, which IMF says is going to provide some much needed macroeconomic breathing room. The first pivot on monetary policy is underway, with major central banks already easing, but IMF warns inflation in services remains very elevated and therefore vigilance is key. The second pivot is on fiscal policy, where it says after years of loose fiscal policy in so many countries, it is now time to stabilize debt dynamics and rebuild the much needed fiscal buffers. And the third and the hardest pivot, it says, is towards growth enhancing structural reforms, which it says are the only way we can address the many economic challenges we face today.
Ritu, thanks a lot for that update. But with that, it's a wrap on this edition of Power Breakfast. From me and the team that put this show together, thank you so much for watching. Bazaar Morning Call comes up next.